Welcome to Investors Edge, powered by SNL. Today's guest is Katarina Throssell. Katarina is an investment associate at Giant Leap, Australia's first venture capital fund, 100% dedicated to investing in impact startups. Prior to VC, Katarina's background was in commercial law and policy. She is also currently a director and the company secretary of Street Smart Australia, a national charity fighting homelessness and its causes. Welcome to the show, Katarina.
So, to begin with, the Giant Leap Fund is Australia's first VC fund dedicated solely to impact startups. Could you share the inspiration behind this unique focus and how has it helped your investment philosophy?
Yeah, of course. And thanks for having me as well. Great to meet you. So at Giant Leap, we invest in mission-driven founders solving the world's most pressing problems. And for us, that's across climate, health tech, equity and diversity, and education.
Mhm.
So we hold the belief that investing in impact startups presents the best commercial opportunities, as well as being the right thing to do for the world. We think that these impact companies have really compelling financial advantages because of the positive tailwinds of the generational shift. Obviously, consumers really care about kind of sustainability and climate, human rights, doing the right thing. And we think that leads to these impact companies having an unfair competitive advantage because of that. And we also think that it helps these businesses just inherently be better businesses themselves. They have that advantage of, employees are more satisfied for working there, reduced costs because they're ethical businesses. So this all just comes together to be, doing good for the world just is good business. And that's
That's
kind of the basis of our thesis.
that's wonderful. It's a lot of like diversity and you're helping empower people through these diverse themes. How do you identify startups with potential in these diverse areas? And are there any specific qualities that make a startup stand out for your investment?
Yeah, for sure. So there's kind of two layers for us. The first layer is our impact mandate. For us, that's a really strict first step. So if a company doesn't meet our kind of impact requirements, we won't investigate further, even if it could be a fantastic commercial proposition. That's because we're really passionate about having impact embedded in our thesis and in the companies we invest in. So that looks like, first of all, meeting our impact themes. So as I said, climate, health tech, education, and diversity has to fall into one of those buckets. The next layer is what we call the impact lock. So we only invest in businesses where the impact is embedded into the business model itself. So we want it to be that every dollar of revenue created by the core product or service of the business can be tracked to a measurable unit of impact outcome. So basically, as the company scales and is commercially successful, so does that impact, and you never have a tension between the two. We think that the best companies are where they inherently work in tandem.
I
So that's
see.
kind of our next test. And then the third test is impact heart. So we're looking for those really mission-driven founders doing their life's work who are really committed to that problem. And they'd be kind of doing it whether it was through this startup or through a different mechanism.
That's
And
very
beyond
good to know.
yeah. And then beyond that, we look for kind of the typical commercial aspects that every other VC looks for as well. So there's often the kind of misconception that impact investors will make trade-offs on the commercials to have that impact. But for us, we believe you can have both, again, in tandem with no trade-off between the two. So we're still seeking 10x rocket ship VC returns, just with that impact embedded as well. So we still care about having a huge market size, about having that kind of unfair competitive advantage or a unique value proposition, the best teams who are solving this problem right now, and those positive tailwinds of it being the right time to have this problem solved.
I see. So you talk about impact mandate. It's actually really difficult for an investment firm to assess impact, especially when we are talking about sustainable impact, impact for the future, and impact in these diverse areas. So how do you measure and assess the impact a potential startup could have?
Yeah, that's a great question. And for sure, acknowledging, first of all, that impact is a very subjective term. Obviously, it can mean a lot of things to different people. But the framework that we use is from the impact management framework, which is kind of viewed as a global best practice approach to impact investing. And again, a question arises in how do you compare impacts between, for example, climate to health tech? They're obviously both very good for the world, but you're serving very different ends, and which one is better? So we've developed our own in-house impact calculator that we use to kind of weigh up those decisions. So obviously it's a complex process, but in essence, we give positive weighting to the impact that or the companies that could create the most impact for as many people as possible and as fast as possible, essentially. So you could be creating positive impact for a few people, but going really deep. That would be looked upon favorably. Or for many people at a more shallow level, those things will kind of balance out. You're making choices there. And then we also kind of favor or favorably weight impact that is kind of solving a problem that the market, or there's a systemic problem that the market's not going to solve by itself. So creating that kind of more like systemic step change that really needs an active intervention rather than something that might just be fixed by other solutions in the market already.
We would love to know if you have any success stories in terms of both financial returns and positive social change.
So we've got a lot of these success stories in our portfolio, but two that come immediately to mind are Who Gives a Crap and Seer Medical. So Who Gives a Crap is very much a household name in Australia now. They've also started to launch in international markets, but essentially it's a sustainable toilet paper company that donates a portion of its profits to building sanitation in the developing world. They take recycled materials and bamboo to create their products, thereby avoiding deforestation and reducing the carbon emissions that you need to create this very kind of everyday essential consumer product. Again, a lot of people in Australia know the brand now. Everyone knows the packaging. They've got kind of great brand presence. It's become an extremely profitable business just in a few years since launching. I think that's a classic example of how you can really create impact and have it be a really profitable business. The other example, as I mentioned, was Seer Medical. So this is a medical technology company that creates platforms for diagnosing and managing neurological conditions, in particular epilepsy. So the kind of usual process for getting diagnosed and tested for epilepsy is a week-long hospital stay. You're hooked up to the kind of monitors and you can't take them off for a full week. And often, particularly when children are getting tested, that's a very disruptive process because you can't leave the hospital bed very easily. You can't shower for a full week. And it's very inaccessible in that people living in remote communities have to travel many hours to a hospital to get this kind of testing. And historically, there'd been a 6 to 18-month wait time to even get tested for this, during which time you can't drive. You might not be able to leave the house without supervision because obviously the risk of having an epileptic episode would be quite high and quite dangerous. So Seer Medical is solving this really important impact problem by kind of changing this process so that, or to enable diagnosis in the home. And this has created fantastic outcomes in terms of the accessibility of testing. So they've reduced wait times down to about 6 weeks instead of that 6 to 18-month period, which is a huge. And since launching in 2017, they've already been able to help over 15,000 people. So you can see that really widespread impact, but it's also a very commercially successful business because it is providing an essential service that people need. They get government reimbursement for some of the cost as well.
During capital infusion, you're helping these startups grow, but does Giant Leap go beyond that and help them in their growth journey?
So our approach is a very founder-led one. Obviously, each company and the founders of each company are going to have very different needs in terms of what their scaling journey looks like, but also what they as leaders need support with. So we kind of let our portfolio companies tell us how we can best help them, and we take that kind of approach. We're also quite a lean team. We have 3 partners, myself and one other associate, and some support team members. And because of that, we don't have the kind of resource that some of the large international funds have to run more of a hands-on accelerator program, but where our benefit can really be kind of disproportionate to the size of our team is in that impact space as well. So when we onboard new companies, we have a very kind of hands-on impact onboarding process where we help them create a theory of change. We also help them set up their impact metrics that we receive reporting on every quarter in the same way that we'd receive financial reporting on the financial health and progress of the company. So we're quite hands-on in that process at the start. And then again, it's just whatever our portfolio companies need help with along the way. Some examples in the past have been help with financial modeling, financial reporting, introductions to other later stage investors, that kind of ecosystem support and building, and then also connecting the founders within our portfolio to each other, because common theme is, while they all work in different areas of impact, they're all incredibly mission-driven founders, and there's a lot of similarities in the way that they approach and see the world. So even just creating that community for them to connect with and help each other has been really valuable.
That's great to know. And talking a bit about your experience, you have background in commercial law and policy. How do you think your expertise has influenced your role as an investment associate here at Giant Leap?
Prior to Giant Leap, I worked as a commercial litigation lawyer at a prominent firm in Melbourne, in Australia. In that role, I was doing a lot of kind of corporate governance work, some regulatory affairs, royal commissions, directors' duties, that kind of commercial side of things, which obviously ties in quite well to you know board reporting, managing companies, that kind of lens. But what really drew me to this area was the work I'd done in human rights law and climate law in the past. And that's where my passion really lay. I knew that I wanted to change careers and be more focused on that impact
I
every
see.
day. And so I shifted to startups instead of law because I saw, obviously, climate litigation is a really important thing and it's essential to solving the problem. But I prefer working with startups who take a very kind of positive and forward looking view to solving these problems now rather than litigating about them in 10 years' time.
Makes
Um,
sense.
so, yeah, I really enjoy that kind of people focused, forward looking aspect. The way that my kind of past life has influenced my investing is it's definitely helpful to have that broad approach to impact to move into this space. So having seen the way that climate law and human rights law, things like sex discrimination, racial discrimination cases happen in practice, that's a great foundation to kind of move to the front end of impact as well. But also having all of those different kinds of experience just lends to that kind of, you know, general problem solving skill that really is the core of investing. That kind of curiosity, being able to dive into a new problem every day, become a subject matter expert on a new industry vertical very quickly. There's a lot of similarities between that and investing and the kind of work you have to do as a commercial lawyer, getting given a new case, having to figure everything out in a short amount of time. So it's very exciting to be able to apply those to impact now.
That's very inspiring to say the least. You've also been a director and company secretary of Street Smarts Australia. Can you tell us a bit about that and how has the connection to addressing homelessness and its causes impacted your personal journey?
Yeah, of course. So I started volunteering for Street Smart Australia probably about 18 months ago now. And I became involved. Again, I was still working as a lawyer at the time. I was really enjoying the kind of pro bono volunteer legal work I was doing, but I wanted to take that to the next level and apply my corporate governance skills to an actual charity setting and volunteer my time in that way. I was drawn to Street Smart's human rights based approach to the homelessness crisis. In Australia, as in many other countries around the world, we're facing a really significant cost of living crisis at the moment. And our cost of housing is one of the highest in the developed world, and it's excluding a lot of people from being able to access safe and affordable living. The way that the way that Street Smart operates is kind of as a fundraising body to raise a lot of funds and then distribute those funds directly to frontline and grassroots homelessness organisations. So the actual kind of smaller service providers who might be the only ones providing an essential homelessness service in a community. But often those charities are too small or just don't have the resource to kind of seek or acquire funding from government or larger philanthropic bodies. So we provided that kind of bridging the middle gap to help them continue running without having to do the hard work of going out and fundraising for themselves. So I guess the way that this connects in to my work as an investor at Giant Leap is, again, often people kind of lump impact investing and philanthropy in together. They're actually very different. At Giant Leap, we're impact investors, but we're focused really on the commerciality of the prospect. And we see impact investing as a fantastic way to generate returns while also solving really important problems. But we acknowledge that venture capital is not the solution to every social problem in the world. And I think that the housing crisis is one of the things that can't just be solved by technology. There are a lot of other factors at play there. There has to be a lot of government intervention, and then philanthropy is filling the gap that the government hasn't been able to or hasn't been willing to solve to date. So I see it as, related in that it's still obviously very impact focused, but it's kind of a different approach to solving a problem that can't be solved kind of by capital alone.
I see. Yeah, that's very inspiring to hear because, as you said, technology cannot solve all the problems. But I'm still like happy to hear that more and more VCs are focusing on impact investing and trying to solve some bits and pieces of it. we talked a bit about this, and you said that Giant Leap has a diverse set of areas that it invests in: climate, digital health, edtech, diversity, equity, and inclusions are your key impact themes at Giant Leap. Can you tell us a bit about how these themes align with your mission and how startups in these areas contribute to positive change in society like
Mhm. Yeah, so when the partners started the fund back in 2016, they chose these impact themes as the kind of problems that were, on the one hand, some of the most important problems that the world is facing, but also the problems where technology and values aligned capital can move the needle. Tech can really change things in climate, in health tech, and in equality in certain areas like access to education and diversity, equity, and inclusion. So those are kind of why we've chosen those themes and why they're important to us.
how are you making sure that the startups that you've selected are actually contributing positively?
We know we need a lot of technology to get us to net zero and to decarbonize as quickly as possible. That's not just going to be able to be done by carbon markets alone. Like, we also need the hard tech that's going to help us decarbonize. So that's an area that we're really passionate about and interested in. And then in healthcare, for example, we think that technology can play an incredible role in increasing access to healthcare, but also the efficacy of outcomes. And I think we're going to see a real shift there now with the mainstreaming of generative AI as well in the healthcare space. I think that will really accelerate progress in the right direction. And then in terms of the second part of your question of how are we making sure that these startups are actually creating positive impact, of course, so we invest really quite early stage. We invest from pre-seed through to Series A. Usually our companies at the point that we invest will have some revenue, they'll have early indicators of product market fit, but that impact might not be 100% realized yet. If they're only starting with a handful of customers, we expect that impact to grow and scale over time. And that's why we're looking for that impact lock piece that I spoke about earlier, about having the business model actually have the impact embedded, so you don't have to worry about the impact being lost along the way. And we also really consciously select for what we think are the most kind of effective impact areas or solutions when we're making our investment decisions. So we see about 1,700 startups a year, and we only make about 4 investments a year. So that's a very, very pointy funnel.
Yep.
And that means that, we really can choose the best and most effective solutions out of the ones that we see.
That's wonderful. One thing that we've noticed talking to startups in the impact domain is that scaling their business while maintaining their social and environmental focus is really difficult. And can you tell us a bit how Giantly provides the support and resources to its startups to overcome these challenges and actually achieve their goals, both financially as well as like socially?
Yeah, of course. So again, I think this links back to having that impact lock and having the business model or impact really be embedded in the business model itself, so that as the company scales, the impact inherently scales with it. I think a fantastic example there is one of our portfolio companies called Great Wrap. So they create kind of biodegradable cling wrap alternative and pallet wrap alternative. So plastic-free solution. The input is potato waste, so agricultural waste from farms that would otherwise go to landfill. That's a positive input where they're avoiding those tons of waste diverted from landfill. And that can also be converted to tons of carbon emission equivalent that would be emitted if that waste just ended up in landfill. They use that as the impact into their product. They then create this plastic free, biodegradable alternative. That's the end product. So then you can say for every product sold or every meter of stretch wrap sold to manufacturers, that's X tons of carbon emissions avoided. And it's a really direct link. So that scaling kind of just happens by itself. Um,
Are there any mechanisms to make sure that the startups you're investing in actually continue, keeping their focus on impact rather than becoming more business oriented?
Yeah, definitely. So, two things there. The first one is that we do set impact metrics for each of our portfolio companies when they're onboarded into our portfolio, use them in tandem with our founders. So, we want them to be metrics that they're already tracking because they're core to their business, and that they also provide really positive kind of marketing support for their mission. We know that consumers really care about sustainability and ethics nowadays. So, if they're already tracking these impact metrics like tons of carbon emissions avoided, or patients who are benefiting from the healthcare service, things like that, they can use that to further their business aims already. So each quarter we kind of track those metrics, make sure they're staying on track. If anything looked like there were concerns, that's a conversation we'd have and would help them kind of work through those issues. But again, to date, usually, well, every time the impact scales or tracks very directly along with the commercial success of the company. So if there's a dip in the impact, it's usually just because revenue's dipped. So that becomes more of a commercial question anyway. But the second point there is that, again, when we're choosing our founders to invest in, we're really consciously choosing people who have strong impact heart. They really care about the mission they're solving, and we can see that we're values aligned with them, so that we can trust that when those tricky questions do come up, they're inherently going to make the right choice, because that's how they exist in the world and what they believe in.
I see. That's wonderful to know. How do you quantify impact? It's a challenge that a lot of investors in this domain face, and given you're like also investing in diverse portfolios, it becomes even more difficult to quantify impact.
When we first onboard our portfolio companies into the portfolio, we set those impact metrics with them so that they're things that align well and make sense with the business. And they report to us on them quarterly so that we can always see how things are
So
going.
it's per business, like it's different for each business.
Exactly. And it will be different for each sector. In the climate space, often it will be like tons of carbon emissions avoided from the product or service, or tons of waste diverted from landfill is another common one across the portfolio, or number of trees planted might be relevant to a certain business model. Then in the healthcare space, it might be dollars savings to the healthcare system. So like the burden taken off the public healthcare system by having this kind of more efficient product, or positive impacts on patients. So it could be percentage increase in adherence to taking your medication, or it could be percentage increase in or reduction in symptoms, things like that. And so we set it so that it makes sense for each company's mission and what they're actually trying to achieve. In the equality space or the
I see.
education space, it might look like the number of students who now have access to education or positive kind of job outcomes who wouldn't otherwise have had that if it were not for the program. As our impact data is publicly available, so every year at the end of each financial year, we publish an impact highlights report that provides aggregated data across both of our two funds, so the whole portfolio on that kind of collective impact. Our next one for financial year 23 will be coming out in the next kind of month or so, where we'll be able to show the kind of step change improvement on the impact over the last few years from our portfolio companies.
I see. This one is for potential entrepreneurs who are planning to seek investment from funds like Giant Leap. What advice would you give to increase their chances of being selected? Any qualities or milestones they should emphasize in their pitch?
Yeah, that's a great question. So there are kind of 4 key things that we look for in all of our investments after you've met that impact threshold. So obviously the impact comes first, but then on the more commercial side of things, the first thing we're looking for is a compelling solution to a really painful problem for customers. So we want this to look like, why is someone willing to pay for your solution to have this problem solved? And why is it a problem that really needs to be solved now? The best way to kind of demonstrate that is through your traction to date and that kind of evidence of early product market fit. And particularly in this kind of macroeconomic environment where things are a little bit softer, we're looking to just see that kind of growth month on month. And it doesn't matter exactly, there's no set metrics as to what those numbers need to look like at each stage, because it's so variable between different sectors and different verticals, but it's showing that growth journey over time and that you're kind of working towards and having that great progress towards your goal. So that's the first one. The next is that there's a big enough market opportunity for this business to grow to 10x its original size. So that's that kind of VC venture scale returns that's very classic in the industry. We want to see that potential for rocket ship growth. The next, and potentially the most important of all actually, is the team that has the right skills and resilience to succeed. So we're really passionate about investing in diverse teams because we believe that diversity leads to the best kind of problem-solving skill, and that's what gives you the edge, as well as it obviously being the right thing to do. But we want to know why your team are the right ones to solve this problem? Is it because you have some kind of unique lived experience with the problem, and through that can identify a solution? Or maybe you're an expert in your field and that makes you the right person to solve this problem now. It can really be anything. And our teams that we've invested in come from all different kinds of backgrounds, both personally and professionally. But that team thing and having really exceptional founders is incredibly important. And then the final and fourth point is a sustainable competitive advantage. So we want to see that you have a unique value proposition that really stands out from the crowd, and that you're creating some kind of moat that means that someone can't just come in and kind of copy or steal your success.
Okay. So tell us a bit more about this. Like, you're investing at an early stage, right? Is the idea enough, or you need an MVP, or do they need like revenue streams? Like, what stage is ideal for them to qualify as an ideal investment opportunity?
We invest from pre-seed through to Series A at Giant Leap, with the bulk
Mhm.
of our investments being in the seed and the Series A buckets. So we have made some pre-seed investments in the past, but it's not our primary focus. For us, the pre-seed will be, there should be a product, but it doesn't necessarily have to be in market yet, and it's probably still pre-revenue, but it has to be more than just an idea. We do want to have, something built and ready to go. And then for the seed stage, we expect the product to be in market. We expect there to be some early revenues and those kind of first signs of traction towards early product market fit, but there doesn't have to be kind of any significant revenues yet. And that's the stage where we're looking more for, the speed of execution, that resilience, that grit, and that kind of, signs of early growth in the right direction. And then when you get to Series A, that's where we're looking at more substantial revenues and that real kind of growth trajectory to take you to the next level.
Mhm. And Katrina, like, Giant Leap is primarily based out of Australia. Is your focus only on startups based in Australia, or people from outside the, like, anywhere from the globe can apply?
Mm-hmm. We
Mhm.
primarily invest in Australian companies, and that's due to our kind of regulatory structure that we operate under. But we do have a 20% allocation of our total fund that can be invested in international companies as well. So we've made a handful of overseas investments before in both the US and the UK. So we're very open to meeting founders from all around the world, and we'd love to hear their solutions to problems. But we are restricted in that it's kind of a smaller bucket for us. But yeah, some of our fantastic companies are based overseas. And we've also had quite a few investments that we've made into Australian companies who then go and later on become an American or a UK domiciled company as well. Within that 20% allocation that can be invested in international companies, there's no strict requirement that there has to be a connection to Australia. We're happy for the impact to be global, or kind of based out of anywhere in the world. Obviously, when you're solving these massive global problems, things like the climate crisis, the solution has to be everywhere. And we don't see merit in there only being a solution for Australia and for nowhere else.
Mhm. Mhm. That's wonderful to know. So if there are startups who are interested in impact investing and align with Giant Leap's mission, how do they reach out to your firm for opportunities? What are the best practices that they should keep in mind while initiating contact or trying to start a conversation?
We'd always love to hear from mission driven founders. We're excited to talk to everyone and really hear about what they're working on. The best way to reach out to us is probably directly through our website. So giantleap.com.au. There's a page where you can submit your pitch deck straight to us. We're a small team, and the benefit of that is that we all see everything. So, as I mentioned, we receive about 1,700 pitch decks every year, but we review every single one of them, and we will respond to every single person. So if you reach out to us through our website, basically your deck will come straight to me and my colleague Hannah, and we'll read it and we'll get back to you. Otherwise, you can reach out to us on LinkedIn as well to start a conversation. But the most effective way is definitely to send in your pitch deck, so that we can get to know you properly.
That's wonderful. And sounds like a lot of work, like 1,700 startups, and you're responding to each one of them.
Worth it though. We think it takes a lot of time and a lot of guts to reach out to investors. We understand that it's very tough for founders, right? So we want to just show them the respect, that they deserve of actually getting a response.
Wonderful. It has been like an inspiration to hear about your passion and the work you're doing in the field of impact investing. And Last question for you. What is one impactful success story from your portfolio that has deeply resonated with you and reinforced your belief in the power of impact investment to create a better world?
Yeah, fantastic. I have a very soft spot for many of our portfolio companies, but one that does come to mind is called Trace. So Trace is a carbon footprint management, reduction, and assessment tool for small and medium enterprises. Their real focus in this platform is on kind of creating behavioral change within small businesses to help them decarbonize and reduce their carbon footprint. And again, they're kind of focusing on doing this through behavioral change. They're really keen to help employees understand their personal and business footprint and help those people make really manageable but meaningful changes. So we know that there can't be a net zero economy without small and medium businesses transitioning to net zero. So, for example, in the Australian context, 98% of businesses are actually in that small and medium enterprise category. And so, if they don't decarbonize, then the problem is not going to be solved. But obviously, a lot of these smaller companies don't have the resources that the large listed companies do to have a whole kind of sustainability department to put all this work into measuring emissions and decarbonizing. So that's where a tool like Trace comes in to really support them on that journey and do it in a very human-centered way that takes people along on that journey so they understand the mission, the importance, but also the impact that they're individually having. Because we know that in creating any kind of behavioral change, you need that personal buy-in for people to actually kind of come along with you. So the company was started in 2020 by the founders Kat Long and Joanna Auburn. And since that time, they've already offset over 42,000 tons of carbon emissions through the companies that they've helped. So again, that just really has shown that you can have this kind of tech-enabled tool that takes a very human-centered approach, but actually creates huge impact and touches a lot of people's lives along the way.
That's very impressive. Thanks for sharing.
Thank you.
And with that, we'll wrap this episode of Investors Edge. Thanks, Katarina, for all your insights.